everyone, and welcome to Pixels and Profits. We are back, and for this episode, we're going to try something new. We're going to discuss 4 recent popular hot topics in gaming. First, an update and kind of more recent takes on Ubisoft, similar kind of more recent update and takes on Unity, some thoughts on China and outlook in terms of what to expect in 2025, and finally, we will end with the Microsoft acquisition of Activision in terms of the impact and the future outlook in terms of that acquisition. How are you guys doing?
Yeah, things are good.
Doing all right.
Summer is over. Onward we go.
Summer's over.
Yeah.
It's now in the 40s when I wake up in the morning, so it's definitely feels like fall
It's
here.
brisk.
Yeah.
Yeah.
We got football season, so that's good. But I don't know, Matthew, you want to take us away on the first topic as far as Ubisoft?
Yeah, we can dive right into it. I know it's a hot button topic, but honestly, there's not too much more for us to say. I know we went in depth about it, a few months ago, and to be frank, a lot of what we discussed is still relevant. So if you haven't listened to that, go back and listen to it because we're not going to say the same thing over again. What we will say is kind of talk about what's happened since and kind of, just with the news where we think it's going. Since we discussed, we kind of outlined a bunch of catalysts that were set up for Ubisoft during the summer and into the fall that maybe could have, put the company on the right track. And, one of those was Star Wars Outlaws. That did not live up to expectations. We can go into the reasons for that. I think I remember saying I expected the game to be broken at launch. I think that was pretty much true. I think it also missed on a lot of other factors, but I think there was definitely quality issues as well. They delayed more games, especially an Assassin's Creed game. That's never a good look. Again, we talked about how it's an execution story and they just do not execute as they plan to. And that caused the stock price to plunge a lot on both those items. And, then there was rumors that they might look to get acquired. There was Tencent rumored. The stock went back up a little bit, but again, this is all just kind of all of the same. So the real question is, those catalysts are past, they didn't pan out. Really, they either need to make some deep cuts structurally and organizationally on, as we talked about, refining their portfolio to only the games that really deserve the investment, or they got to find a buyer. And so, I guess from the latter point, we can open it up and kind of discuss who are the logical buyers and what are your thoughts there?
Who are the logical buyers for Ubisoft? I think there's a bunch of different varieties of ways you can go with this. I think just from a brass tacks perspective, the company is now worth, 1.7 billion on Euro. You can make a case that there's probably 2 or 3 titles in their portfolio that are worth that to the right buyer if they have the right outlook and view and development cadence to get behind it. But, as we've discussed before, there's a lot of things that are in the way. And, one is the ownership of the brothers. And the second would be the notion that this isn't France, which is a hard place to perform restructuring in, which I think we all agree, and most do agree, that Ubisoft requires at this point in time. The cost base is structurally too high for the product they're moving out, and that only has a certain amount of runway unless new capital is brought into the business. So, the logical stuff there is I think PE probably makes the most sense. I think this company does need to take a step back into the private markets, maybe in perpetuity, to make some of these harder decisions. But outside of which one, who cares, right? I don't think this is a good fit for any of the large public gaming companies like a Tencent or not Tencent, Take-Two or EA here domestically. And that's mostly because it's they'd be absorbing more headcount than they would be revenue. And it's just they'd have to do all that stuff. I do think they'd be interested in potentially taking some titles off hands, and I think a lot of companies would. But for a full-scale buyout, I just don't see that happening. It's too much disruption.
The caveat I'll make to private equity is I only think that happens if 2 things happen. One, if the Guillemets are walking away. I don't think private equity is interested in keeping them because you're just getting more of the same, right? And so from that perspective, private equity is going to come in and be stereotypical private equity and gut this thing. And then the second thing is guarantees from the French government and the unions that they can make the cuts that they want to make. I think without those things, it's tough to see how that works. I think there's things that can be done to make this a more viable business. Assassin's Creed is a great franchise, and it makes a lot of money when it comes out on time. I know they just delayed one of the games, but right now it's it's a 2 out of every 3 year cadence. You could honestly see private equity say we're actually going to invest more in Assassin's Creed and build up a third team and have it be an annual franchise, right? Like that could make sense, right? So I think there's opportunities, not just cutting, but also potentially reorientating some of the headcount. They'd have to probably go to the Canadian studios where Assassin's Creed is, but I think that's an opportunity for them. In terms of Tencent, and this ties into, we'll discuss China more deeply, but if they were to try to acquire Ubisoft on the whole, it potentially opens them up to a whole can of worms with national security and a whole CFIUS review, which is maybe scrutiny that they don't want to open on themselves by acquiring a Western asset. So there's a lot of things there, and I guess they can just caveat every M&A discussion in gaming is you could ever rule out Saudi Arabia. Money is not an issue for them should they want to buy this. I just strategy wise, it doesn't seem like a huge fit, but you never know.
Yeah, I think ultimately they need to address a pretty fundamental and structural issue. And so I think if we were to pull back from the micro, looking at more the macro, I actually think that we might be on the cusp of a pretty major transition from kind of like big studio, huge team, monolithic game development approach that is, when you look at Ubisoft, it seems like that's how they develop. And if you look at recent history, we've seen a number of this kind of model not be super successful. So whether it's Warner Brothers, Rocksteady Studios with Suicide Squad Kill the Justice League, they took a 200 million loss on that game. Sony's Concord sold 25K copies, peaked at 13K players, and then the game was pulled and players were given refunds after only 2 weeks after release. Babylon's Fall by Platinum Games in 2022, Bethesda's Redfall in 2023, Battlefield 2042. And to your point, Matthew, we're going to talk about China a little later, but I'm not quite sure if Western game developers are going to be able to pull off these kind of big budget, big team, monolithic game development models in the context of the modern day environment. Maybe the only exception I can think of is Santa Monica Studio, but they are also known to be sort of anti-current Western game dev culture by being extremely hardcore. China still seems to be able to do this model. I think there may be some nuanced differences in terms of how they actually develop, though, on the ground. But we have seen success by MiHoYo more recently with Game Science and Black Myth Wukong. And by the way, many more of that kind of model, I think, are going to be coming from China. So if anyone can do the model, I think it's got to be a hardcore team, probably with a lower cost structure, probably from China or somewhere else in Asia. But the West, for reasons that's probably not worth getting into as part of this discussion, I think is going to be, it's a question of whether this model can continue to create a profitable business for Western games studios, and in particular Ubisoft. So we'll kind of see, and I don't want to rehash. There's a lot of complaints I can make. We've already talked a lot about Ubisoft before, so I won't go into that. But my general take on Ubisoft is that we've been kind of talking about and warning about this. I think I believe we're the ones who probably popularized the bookings to employee analysis that so many people have now copied when with respect to Ubisoft. But I think that, in speaking in terms of like a potential viable, just kind of turning it positive, what's their path to success in the future? I do think that there have been attempts by many game studios to leverage Chinese game development, and so maybe some form of hybrid development model driven by, well, not driven by Ubisoft or the.
I mean, Tencent's making an Assassin's Creed game. Like, I don't know how much more you can do. Like, and they still can't get that right apparently.
Yeah.
Well,
We'll see,
I guess
but,
we'll have to see how that pans out. Maybe they'll get the inkling that that's the path forward if that does end up being a hit.
Yeah.
That's one of the catalysts that's still hanging out there that we haven't poo-pooed on yet.
So I guess we'll see. I do think that there's got to be a big major change. I think just letting Ubisoft continue to operate as is probably disaster, in my opinion.
Yeah. Yeah, I mean, so I've been doing this stock market meets video games thing for a little bit, and I still catch up on Ubi from time to time for setups and personal interest and just what's going on in the industry. But it's really not one that I have a ton of confidence trading anymore because any lift from here requires execution that I just don't think they're capable of. So like I saw the stock down 30% a few days ago and hardly batted an eyelash. It's just Ubisoft. And I do understand this is a tough industry. Making games is super hard. But if you look across the industry over the last 10 years, the really successful companies have found ways to increase audiences for their top franchises while also making more money from those top franchises. So Ubi has not. And then they've also done a bunch of other weird things that haven't created any value. And I think, the time is just kind of up. At the same time, I do feel like it's in deep value territory. I'm a firm believer that it's worth more than 1.7 billion euros in some light. But the problem is it's like big structural and managerial changes need to occur to unlock that value. And for those of you that are newer to this stock, this isn't necessarily new. I think we all kind of shared a similar view on Unity after the pricing kerfuffle incident. But in that instance, change happened pretty quick. It was just like a couple of weeks after that JR stepped down and things started going in a different direction. So you need like step function improvements here and a couple of big things. And the fundamental stuff just really doesn't matter that much right now. So the stock will certainly improve on better than expected sales numbers, provided they've tanked their guidance enough. But it's certainly not going to re-rate anywhere near like the likes of Take-Two or EA. And without the other stuff changing, Ubi is still going to throw big dev dollars into projects that aren't really in tune with today's gaming world. So it's like a corporate slow follow business. And I guess as a final thought, one of the strangest things about Ubi, aside from ownership, might be their guidance methodology. I think their finance function kind of forecasts while assuming everything is going to work, which deeply contrasts how my mind works. Game publishers should really think twice about forecasting revenues for new IPs. It's not something that I see done very often, and it's for a good reason, right? Like no company is immune to this thing about like 10% of new game launches working. And no games company should miss guidance because a new game didn't work out.
Yeah, I think I want to tie one thing that each of you said together. JK, you talked about, these massive scale teams, and Brian, you talked about the other pubs leaning into their large franchises. Large scale teams work on proven franchises, Call of Duty, FIFA, right, etc. Grand Theft Auto, right? That's a proven model. That's a proven franchise, has a proven place in the market, has a loyal fan base. In the case of Call of Duty and FIFA annual, right? That's what Ubi should have done years ago and should now look at doing for Assassin's Creed, right? Because that is a franchise that they can build a profitable company around. But look, personally, Mario Rabbids was a fun game for me, but they should not be making that game, right? I think the first one did end up selling like 5-6 million units and actually made a nice return. The second one was another flop. Like there's a lot of these indie quality games that they have been making that are getting way too much money to make. So either make them for under $50 million with a skeleton crew and just sell it to Game Pass, or, focus your resources on Assassin's Creed, R6, maybe Division, but I think after Outlaws flopped, you have to question the massive studio, right? Because the last Division game didn't do so hot, and now they flopped on Avatar and on Star Wars. Like now there's question marks on Massive, which is supposed to be a strong spot of the company. So realistically, like they should look at just becoming the Assassin's Creed company because that's where they're going to make the
Just
return on
rename the
investment.
company Assassin's Creed. New ticker.
Yeah.
Yeah.
Well, I think we could have fun with what the ticker could be with that.
All right.
Indeed.
Should we move on to Unity, or do we have any other thoughts? Any parting shots on Ubisoft?
And it's not meant to take shots. Like anyone who's been paying attention to Ubisoft for a decade, this is not new. It's just now coming to fruition at a time where, they don't have a ton of debt. Most of it's converts, but the converts are underwater. So there's some like weird financial engineering that could, okay, will those convert underwater? I don't know. So they do have a little bit of debt, but more importantly, it's just like, if they can't get the execution right, they will not be viable, especially if they miss on Assassin's. Because in the past, you could always say, well, they're going to miss on this and this, but they'll always hit Assassin's Creed. Delaying Assassin's Creed is the scariest thing for this company, because that was kind of never talked about. The other thing we didn't talk about was in an acquisition scenario, an MBO, management buyout, if the Gimos did something, if they got financing to do it, but that just takes them out of the public eye. It doesn't fix anything.
I think is a good segue into Unity. It's always important to note that we want all of these companies to succeed. The games industry is already at a loss for really strong public companies, right? We used to have a lot more. We don't have so much anymore for a variety of reasons. We want to get back there. But right now, like for Ubisoft, completely fallen off the radar. No games PM cares about them anymore. Like just to be blunt. They have so many things to fix. And like the easiest way to do that is rip the Band-Aid off. And that would be to answer these long-term questions around like who's running this company, what's the strategic direction, we want you to succeed. But anyway, like so Unity, not too dissimilar a situation, right? Like we rewind back a year ago, very unique situation in which like all of their customers wanted this company just to go away. And it was almost overnight, right? Just because of a pricing decision that was somewhat of like a betrayal of trust. So just like, let's talk about where we're at now. So Unity troughed, well, it could be a trough, around $14 in August, implying a market cap of just over $5 billion. It's also worth calling out that was a crazy week in the market. This was the Japan-US tech unwind. So like we woke up and everything was down 10, 20%. And I think all of this stuff makes sense in a vacuum, right? There's a lot of fundamental questions against Unity in trying to determine what the company is worth. The ads biz was struggling to maintain share. The runtime mishap we just talked about. Software is growing a little bit, but it loses money. The end market, which is gaming, is troughing itself. Not a lot of dev spend, and the startup environment is really tough. The game dev community lacks trust and also questions the attention to game development or game engine development versus just trying to make money. So all of these things combined are like a really good recipe for multiple contraction, which certainly occurred. All right. So that there's been a lot of developments over this year, though. Like, so Whitehurst came in and cut costs. He divested a bunch of weird things, and then he brought on Bromberg as the new CEO. And Bromberg's first actions were to bring on talent to revitalize the games or the ads business. This is Jim Payne and Alex Blum. He killed off the terrible pricing policy in favor of increasing subscription prices, which all good software companies do. New CFO. And then more importantly, he right-sized the expectations with the street last quarter, his first quarter on running the show. Meanwhile, I would say like the mobile gaming backdrop is at least not getting any worse. And if you can't get behind mobile getting better, we're starting to see a little excitement around next generation computing platforms and the likes of Meta and Apple, Google. And it's not a guaranteed win, but I do think engines like Unreal and Unity will be relevant in the next platform, even if that is 4 or 5 years out. So big step back again. Unity is a 500 million run rate software business, which is Create, and a 1.1 billion ads business, which is called Grow this year. A 2.5 times multiple on ads is like 2.75 billion, which at 5 billion means you're valuing Unity Create at 4.5x, which again, I understand given how we got there, but it seems a little grim given how many strong swings the company is taking, and they also have 70% market share of their core business. I would also say I have a soft spot for public market turnaround stories. I don't know Bromberg personally, but every piece of feedback I've received has had similar qualities, right? He's extremely smart, he's hardworking, he gets shit done, and that kind of sums it up. The amount of professional respect I hear from past coworkers is very solid, and I would say this covers the Zynga era as well, which I had an interesting perspective on at Deutsche.
So, Brian, that's a red flag for me, to be honest with you. Like,
what's up?
It's like kind of like I don't know, counterintuitive, but I kind of feel like if you're leading a turnaround in a company, that I agree with you. like the feedback on Bromberg has all been positive, but the kind of leaders that I've seen that have been able to affect a lot of change are generally having more mixed reviews, more barbell reviews, right? Not mediocre, but like, oh, this guy's great, and oh, this guy's a jerk. He's this, he's that, or whatever. But
but didn't you get those too?
I didn't get anything negative on him, but
So I think that end of the barbell was probably like, I don't want to like, it was just like, he's tough. He's like a tough guy.
Okay.
So you have all these things. He's brilliant and he gets things done. But then I also get.
I hope you're right. So
well, no, that is I can attest to that right now.
Right.
Yeah,
but
right.
yeah, but for me, it was just like all these positive things about Bromberg, and I was like, I'm a little worried. But
no, I didn't get the impression he was the guy that's like bringing cats in the office and stuff and trying to win everybody over. Like, yeah, everything was like fundamentally sound. It's like someone you'd want to be able to turn something around. It's not an easy job. There's so many personalities to manage. There's like investors to manage. There's like, things catch on fire 3 times a week. You need someone that's ready to like just run through walls. And that sounded like what it was.
I hope so.
My only caveat to what you're describing, because I also love a public market turnaround story, Zynga going from what it was $1 to getting acquired at $12 or so. But I think that there's structural issues with this company. If you believe the ads business will stabilize and stop ceding share, mostly to AppLovin, and can generate positive EBITDA, then I guess the business can be a steady state business at some level. But if you don't believe that, I don't know if subscriptions are enough revenue for them to, be the business they want to be and remain a public company at that scale. In which case, I wonder if this company has to go private to do a pricing transition, not just start charging per download, but actually go to the the Unreal model, go to a full commission model. We saw a lot of software companies in the 2010s, mid 2010s. They had to go private to go from a license model to a SaaS model because it's a very messy transition on how you price. And I think a similar thing might need to occur with this business for them to be able to scale the business longer term with their customers and their end market, right? Otherwise, their revenue is capped. It's you can literally just there's so many developers in the world. X% will use Unity. That's their as big as they could ever possibly be, aside from price, year-to-year price increases. And so, I think that if they wanted to really make a pricing transition and not do it in the eye of the public again and do it more holistically, you need to do that as a private company.
I can see some argument for that. I guess like what I'm trying to define here is like that this is like the early stage of a potential turnaround, right? And you see it at a level at some point 6 months ago where this thing looked attractive. So it's gone up 40% since then. So you're getting you're getting multiple expansion, but you're not necessarily getting fundamental improvements. A lot of that stuff you have to buy into before it happens, right? So like right now, we're all still talking about Unity being a boring mid to high single digit grower. Maybe that gets to low teens on subscription increases on year basis. It's still a relatively small software business, 500 million, right? But like, what if that ads business doesn't continue to deteriorate? What if the people he brought on actually could, drive some share gains against the app, or at least not do any worse? It's a very profitable business. The public comps traded a much higher valuation, AppLovin, Trade Desk, et cetera. So there's a lot of room to support a much higher multiple on the stock if fundamentals inflect. And right now, all we know is that someone's working on it, right? So it's less easy to pound the table here, given how things have run. And if the market wants to have a bad day, this is going to get hurt more so than those because it's a small cap name. Folks are still getting involved in it and getting into it. But from 3 or 4 months ago, much like Ubisoft now, no one cared about Unity. Like it was dead. And more recently, I've been hearing folks that just want to get caught up on it, or they want to talk about it a little bit more and see what's new. So this is what's new. It is a turnaround story early on, but you have to have some confidence in this stuff working out to take a big position against this and make some money. Because there's plenty of room for it to fall apart, but this is not Ubisoft anymore.
Yeah, I wish we had more granularity on the cost structure of both businesses because, their run rate OpEx is about $1 billion coming out of the last quarter, out of second quarter results, right? 1.1 billion. It'd be interesting to know what that breakdown is, because if it's 50-50, it means the software business does not make money, right? And that's only OpEx. That doesn't account for, COGS, cost of goods sold. It's not, so I think that would be something. If you start seeing them start breaking that out, it might shed light that they're going in that direction to eventually, get out of ads. But I think that's kind of the problem here is, the technical investment they have to put into the engine and the platform is, unless the revenue scale of the software business gets, multiplies several X, it's hard to, say it's a viable standalone business with the current pricing model.
Yeah, and like you said, it's tough to see where their core market, like game developers, expands materially post-COVID, right? Because you had like that huge hyper-casual boom, right?
Not expanding.
You have to have some, again, ads business aside, you have to have some view that the TAM for said software product is going to expand, whether that's through new industries, which they haven't killed off, or next generation platforms. Like is the intensity for mixed reality or AR, VR going to pick up materially over the next 3 or 4 years? And that's a big question mark too.
Well, I think if that's the case, they would be better positioned to capitalize on that as a private company. Because as a public company, if you see them chasing all of the buzzwords, people are going to hate that. As a private company, they can make the investments and be there and wait for the hockey stick to take off.
Yeah, I would say I've seen harder public company stories. Almost 2 billion of revenue is not bad. I think everything's easier private if you have someone that's willing to put that back. But Unity was private once and came out, and someone has to love it a lot for the next 5 to 10 years to do that. So,
from my perspective, just speaking as a developer on the engine side, I do think that. So a couple of things. One, I think that there's actually quite a lot of room for improvement. Maybe I've already spoken on this before, but I kind of liken Unity, at least pre-Bromberg. I don't know what it is today, but at least pre-Bromberg, I would say Unity, from my interactions with many of the engineers from the company or those who were interviewing, was that they're kind of like old Twitter. So I think there is potential to similarly gut maybe a big part of that workforce and get the people who are already working on the engine to be much more effective. The second part is that I will say there have been some pretty nice improvements as part of Unity 6. So rendering enhancements with performance and optimization improvements to URP, Universal Render Pipeline, more for mobile, and HDRP, the high definition render pipeline, more for HD games. We've got some new systems like GPU Resident Drawer, GPU occlusion culling, render graph, which helps optimize and customize the render pipeline more efficiently. So anyway, not to go into the weeds, but there's other stuff around lighting, visuals, and AI, which I won't go into. Some multiplayer stuff that I'm probably a little bit more suspicious about, but while I would love to see a lot more, and I do think Unity from a features and capability perspective has a ways to go, I think it's a good start. So I'm feeling cautiously optimistic that they're going to be able to execute better against delivering more engine improvements that would be very useful to developers like myself. I also think that elimination of the runtime fees, probably not great for the company's financials, but I do think a lot of my fellow game developers who had a lot of hand-wringing about this are now feeling better. My belief is that the adoption of Unity 6 was very low, or I think that Unity thought that it was going to be very low. So because of that, I think they almost had to eliminate the runtime fees, because my feeling is that the adoption of Unity 6 would have been like really bad.
And then we talked about this before, but then you'd have to manage 2 different software systems, one for the freeloaders and then one for your paying customers. It would just make no sense.
So look, I mean, longer term, I'm not sure how good the game engines are as a business. I know it kind of feels like there's, the ad business could be a lot better. Anecdotally, I'm hearing they're just losing everything to AppLovin, and maybe we should cover AppLovin at some point, but it sounds like they're executing pretty well on that side. But what I would do is to just watch for a few things moving into next year, and as someone who's cautiously optimistic on Unity, which is to one, definitely want to see greater efficiency in the company, especially in regards to execution of new features in the game engine. I do think that they could have a much stronger work culture to really become more efficient and effective. Secondly, it would be good to see the economics of that game engine business improve in some way, whether it's through pricing or other ways. And I do think like the game engine itself does provide significant value. So it's probably worth more than just what we're paying for in terms of subscriptions, but how they structure that and what that looks like, I think is TBD. But certainly I think it should. I mean, at this point, I do think Unity is underpricing. Third would be the ad network side of the business, which I think could do a lot better. And finally, I think that there's potential more like option value here, just because you've got relationships with so many game developers that I just feel that this could be leveraged into other services, whether that's ads or something else. But I like to see them more meaningfully leverage the game engine business into other services.
Yeah, I didn't really even talk about that when I was ranting, but the seeing results from game developers that improvements are coming they haven't seen in quite some time is also very positive.
Yeah, so I guess while I'm very skeptical of Ubisoft, I guess Unity, I'm a little bit more cautiously optimistic. And I hope you guys are right on that.
I mean, I know that I've been saying it for a year now and it hasn't materialized, but I still think it's a takeout candidate, whether it's a go private, some of the VCPs that backed it privately, or it's a strategic. I do think that, especially if they could do something to right size the cost structure, especially in the ads business, potentially spin that off and become a standalone engine product, or could a company like Microsoft benefit from having all of that tech stack in house and then, gut the cost structure, put it on Azure, have their own engineers manage the back end? Like, I think there's a lot of strategics that do make sense at the right price. It's just like, can they get a deal done? And I thought when you bring in a mercenary CEO, that's what you were doing. But maybe just because of the interest rate environment, because of the economy, because of everyone's, blowing all their capex on AI chips and AI data centers, that there was no buyers. I don't know. But, I still hold hope that as rates comes down here, that there's an opportunity for that to happen.
And we've talked about this before, but owning an ads business and an engine business makes this more difficult for a lot of buyers to find palatable. I think even some of the publishers would have been interested in an engine business at some point in time, but probably not getting involved with the ad biz. Doesn't make a lot of sense for them.
Yeah, I think Tencent in particular, from what I've heard, wants to drive the roadmap for game engines.
I mean, there was a point in time where like EA was trying to commercialize Frostbite, and I think there was a couple other examples like that too, where they kind of saw the writing on the wall before it even happened, and that would have been pretty special if it lived up to the hype. But it just wasn't like you're not going to find Activision using an EA engine, right? It doesn't make a lot of sense.
Crytek enters the chat.
Yeah.
All right, Matthew, should we talk China? Do you want to?
Well, I think we wanted to briefly discuss AppLovin and just kind of, since it's I think it dovetails closely to the Unity story. I know, Brian, you had a couple notes here, but I would, I'd just say overall, like, it just seems like they continue to eat Unity's lunch, right? I mean, that's just what it looks like, and I don't think there's anything that says that that's going to change. I don't know what you think.
I haven't heard anything other than App is dominating and continuing to take share, which is probably the weakest part of the Unity thesis at this moment. So I don't get I would say the only thing incremental that I've picked up that's interesting is like a lot of game publishers and developers want there to be an alternative to AppLovin. So it sounds like they're getting even more expensive and taking price. So that's like really good for them and not so good for Unity if you can't even give your product away for half the price of your competitor. And I guess, like, look, AppLovin's really worked a ton. The stock was at like $90 after that KKR sell down a few months ago, and kind of traded around there for a while. And then just all of a sudden took off. And so people might be scratching their heads and saying, like, what the hell happened? Well, I mean, it's like the company is putting up billion-dollar quarters now. It's got a founder owner that's still running the company. It's growing like a weed. Street numbers for next year are still a little bit too low. They've put down an impressive amount of free cash flow that gives them a lot of optionality. So it's just like this company is maturing into something that could potentially be a lot bigger. $1 billion a quarter is like that's serious tech. So a lot of people need to start looking at that stock for the first time. There might be a long only or whatever else. And this is just a really good example of re-rating. This is multiple expansion. This is exactly what you want to find early when you're owning stocks. Again, is this thing going to get worked over a little bit if the market gets weak? But yeah, sure. But every other high growth, high multiple stock is. And if you look at this on a multiple basis against something that's actually virtually software, like a Workday or a CRM, it's still super cheap, especially for the free cash flow metrics it puts off. Not as cheap as it was 6 months ago. But all I'm saying, I guess, is just AppLovin's growing up. Their management team has a lot of fans, the investor community. They continue to execute despite all the noise around fingerprinting and everything else, and people are just becoming more comfortable with them as a public company. So that's what happened.
Yeah, I mean, it's a software business that's generating 75% EBITDA margins. Like, you can't beat that. And that's almost a $3 billion run rate business by itself. And even the apps, their game publishing business is stabilized too. I mean, it's a much less profitable and it weighs down their aggregate margins. But yeah, I mean, the only thing you can poke holes in the bull thesis is if Unity somehow stabilizes share losses, or if Apple drops the hammer on fingerprinting, which, I think we've been talking about for over a year now, and they haven't. And so it's there, and if it happens, it screws everyone over. But you can't really predict that until it happens.
I guess the other thing to mention over the roaring airplanes here is that to get comfortable with AppLovin at some point soon, you're going to need to be more comfortable with the projects they're working on and taking share away from CTV and web working out. And they have given indications that early testing is very strong there. But for this to really expand beyond mobile and to grow another $1 billion a quarter, they would need to get some headway there.
Yeah.
All right, China.
Yeah, China's interesting, as it always is, right? If you've been living under a rock, when we spoke about China, we talked about how the stock market was underperforming, how the economy was not quite in a death spiral, but just it was in a huge spiral of confidence, in the sense that consumer spending was down because the real estate market was down, which was, they're intertwined, and there was really no semblance from an urgency from the government to kind of fix that. Well, a couple of months after that, or whatever it was, we get rumors of massive government stimulus. They start cutting interest rates. People get really hyped. And then within a month or two, China is the best performing stock market in the world in 2024. And literally, I think that day that stat hit the wire, it was the top of the market, which is perfect timing, because then we've got the actual announcement of the stimulus measures, and they were not as big, or as, just as big as people expected or wanted them to be. I like to, or someone once described it to me this way, and I like to use it because it's a really good example. The Chinese markets overall is just a giant ball of liquidity that rolls from one bubble to the next, and you survive by getting out of the nth bubble before it bursts, and then you get into the nth plus one bubble before it takes off. That's how you survive as an investor in Chinese markets. And we saw the Chinese stock market, including the Hong Kong market, just go on this ridiculous vertical run, and then it just inverted and went the other way, like literally in a couple of days. You can talk about flows and lack of liquidity because all the foreign money capital has gone out of China. I think that's part of it. There's just a lot of hot money that goes in and out of stocks in China. That's part of it. In terms of what it means for gaming, like, it doesn't really change much. I mean, if they're serious about reinvigorating consumers and consumer confidence, I guess you can argue that that's good for gaming, but we haven't really seen, aside from the more macro pressures, and some of the restrictions on youth gaming, the slump in the last, call it 18 months in Chinese consumer sentiment and overall consumption of luxury goods has not necessarily affected the gaming market, to the degree that it's affected other sectors. So it's hard to sit here and say that it's going to have the same positive impact on the other side. If sentiment picks up, I think you can look at like luxury goods as a better proxy for that, or hotels and casinos in Macau and stuff like that, right? So, when you look at just kind of what it means for gaming, like, but Tencent, as a proxy for the Chinese market, was volatile with all of this. So, I mean, shows what I know.
Yeah, I agree. I think that the positive here is this puts, I guess, the Chinese stocks in the TMT perspective back on the market, or like just a little bit more in focus. Because I do think the recent run felt quite a bit fed by the underweight and short phenomenon, given the size and speed of the move. I'm not sure we're heading back to the 2016-17 era where every TMT hedge fund had to own Tencent and Baba in size. But, I do think the measured pace you described will make the space at least harder to short. And for a company like NetEase, if they do have fundamental improvements with more eyes on them, the stock could move a lot more and have a better investor base. But I tend to agree. This is kind of like, if you're going to do fundamentals, just forget the last couple of weeks ever happened and just get back to it.
But flows matter. As Tracy Alloway from Bloomberg always said, flows before hose. I love that line. And it matters a lot for Chinese stocks because the liquidity is just not comparable. And so, to your point, it was massively underowned because everyone pulled their money out in the last couple of years of China. And then everyone rushed in to buy everything China and the metals. And, you saw it in copper, right? You saw it in casinos for Macau. It was everything, right? It was the entire China basket just went vertical. And so obviously the Chinese gaming stocks are part of that. But, I think fundamentally it doesn't really, move the needle for me, and we kind of picked like, where would you rather be, Tencent or NetEase? Like, to your point, Brian, if you believe in the fundamental drivers for NetEase, it's a cleaner story. I think there's less hair on that story, whereas Tencent is just such a diversified conglomerate business that you need to have a strong view on multiple business lines at the same time, all working to be really bullish there. I think as an AI play, it's really, it's an interesting story. Doesn't really affect what we're talking about with gaming directly, I guess. Maybe it does eventually with generated content and stuff, but we're still years away from that being material for them, right? And so, but it doesn't, it doesn't move the needle for me unless they get real serious about not only stimulus but relaxing restrictions on the sector, and also relaxing, the capital flows in the sector, because that was a big part of what made these companies successful, was their ability to buy knowledge via external investments.
So I guess the big question is, like, does JK still have any Baba left?
I do.
Been the biggest fan.
Yeah. Well, I mean, it's disappointing, right? I think the performance of my Baba stock, unlike my others, and my strategy is to hold forever and to just hold a few stocks. So for me, I own Tesla, Amazon, Google, and Alibaba. And unlike those other stocks, Baba's been a little bit of a dog for me. So, but that was my sort of global China hedge. But speaking about China, I think the thing that I think about the most, and I think is going to be a potential point of the biggest impact for us as game developers and otherwise, is essentially what happens if China invades Taiwan. And so this is, I don't hear a lot of people talk about this issue, but certainly here in Silicon Valley, there's some folks who, some who believe that there's going to be at least a 50% chance that happens, and that whoever becomes the next president will potentially influence whether China does attack or not. But if China does invade Taiwan, then I think that, certainly you can imagine the banning of TikTok, certainly can imagine some of the issues that were popularized before, like Splinternet, and potentially the banning of apps, which already in India, and as somebody who works in India a lot, there's over 100 games and apps in India from China that are banned. That continues to this day. And so this issue of a splinter net, depending on what happens there with China, I think could potentially have a huge impact on the game development ecosystem and winners and losers. Because when you look at, for example, certain genres, whether it's like 4X or shooters, all of the top game studios are from China. So that's basically what I think about in particular, and where potentially 2025 could be a flashpoint for this. So we'll see.
I hope you.
I said this about Russia and Ukraine, and I was wrong. I said they're not stupid enough to do it, and they did it. But I think here, China is not stupid enough to invade Taiwan, and this is just my perspective, having lived in Hong Kong for a few years. The ramifications, not just lives lost in the actual conflict, but what that means for the Chinese populace. The rice imports, soybean imports get cut off. Like, they will starve. Like, because they rely on imports of basic things, food, energy, everything, right? Like, there is a massive human toll that will occur if that happens, and that's why I don't think it's on the cards anytime soon. Maybe if supply chains shift and things work out differently for them, but not in the next couple of years for sure. I think geopolitically overall, though, and that was a big left turn from where we should be discussing, but geopolitically overall, I think the big concern as it relates to gaming is the investee portfolio of Tencent, less so NetEase and others, right? But Tencent has just the biggest tentacles. And, this is a reason that I think that they won't try to acquire someone like Ubisoft again, because if trying to buy Ubisoft opens up a CFIUS review, that opens them up to scrutiny to the ownership of all of their assets. Whereas you can argue that gaming isn't important enough to matter to CFIUS right now, but should they try to do an acquisition that is in the news, then it opens them up to that scrutiny, right? Politically, China is pretty much the only issue that's bipartisan in Congress and in Washington right now, right? And so, you don't want to open yourself up to that scrutiny, but I think as long as they, kind of lay low, so to speak, and, just, wait out the politics, I think, the geopolitical risk isn't too bad. But, will they be investing incremental more capital in the West? No, I don't think so.
I try to stay in my lane, and geopolitical risk in international politics is not it. So I guess from an investor perspective, I don't have anything on that has these sorts of geopolitical risks outside of semiconductors, and that would be not a great time. So I certainly hope it cooler heads prevail or never develop in the first place. But it's just something you can't really solve for, so I don't. But I value your opinions.
No, but it's a valid point you make, though, right? It's I remember when people were, again, I'm going to quote, I think it was Tracy Alloway, because I think it was Odd Lots, right? At Bloomberg, right? During the Russia-Ukraine, when that started, the market sold off because there was rumors that Russia might use tactical nukes. And it's you should always buy that dip, because
if they do use those, your life is over.
Well, if we're being really cynical, market people, right? Option A, they use nukes and we're all dead and your money's worthless anyway. Option B, it doesn't happen and the stocks go back up. You should always be buying on that, right? And it's kind of the same thing. If China does invade Taiwan, or if the market sells off on rumors that China's going to invade Taiwan, you probably should be buying. Again, not investment advice, just general rules of thumb that I have in my head, because everything goes to zero otherwise.
And then just have a few cans of pork and beans handy or whatever else. A couple crackers.
This is a much bigger rabbit hole.
Is this a gaming podcast?
All right, maybe moving on to our last topic, Microsoft Activision. Brian, you want to tee us up there?
Yeah, so it's been a while. I think it was the Console Wars episode where we talked about Microsoft most extensively and the impacts from the Activision acquisition. So I figured, why not circle back real quick? Because gaming is in a much different place versus when the transaction happened. And, similarly, Microsoft is in a much different place versus the merger announcement, which was in January 22. So, we've had this whole expansion of AI. And at that time, Microsoft was enjoying rapid growth in Azure. It was one of the de facto cloud kings, with designs on getting bigger in gaming, which was still very attractive in that COVID bump. And then similarly, while Activision was undergoing some turmoil in management, the business was pretty strong and the pipeline was amongst the best they've had in a decade, right? They had Warzone in there and Diablo 4. The transaction created a huge gaming company, almost 20 billion in annuals, with some of the best content on the planet, and a distribution system that was, while it was losing share, it had designs on this post-hardware world and still does to a degree. So, I think what we're seeing now is that Microsoft is not really immune to the gaming slowdown. And in the midst of this, they're undergoing a big pricing exercise where some of the most expensive games on the planet for production value are being offered on a subscription plan that can be canceled whenever it's convenient. So I think something can be said for digital things that can be made for 200 to 300 million and then consumed by millions. I mean, this is a good piece of the Netflix model, but movies and shows don't need live operations. They just need more content. Anyway, so fast forward to 2024, the dawn of 25, whatever we're in right now, and AI is the way from Microsoft, which also has some positive impacts on Azure. And then gaming is kind of starting to feel more like a question mark. They're not talking about it very much anymore. The disclosures are very minimal. And so I guess the question here is, if we go forward another 5 years, do we think Activision is a larger or smaller company than it is today? So just set that bar at like $10 billion. And then further, does this open up opportunities for other gaming companies? Like, could EA actually have an opportunity finally with an annual-ish first-person shooter with Battlefield? So first question was 5 years from now, Activision bigger or smaller than it is today?
I'm gonna say we won't know because they're just gonna give everything away with Game Pass. And so we won't actually be able to directly count the revenue for Activision.
But once they go down that road, right, it's going to be very hard to ever spin this company out into something again.
Yeah.
Because now it's a different kind of content.
Yeah. So I'm there. I think a lot of investors have been waiting a long time for EA to make a Battlefield that capitalizes on this, right? Activision malaise in general, they've had a lot of issues over the last decade, right? They've had highs and they've had some struggles along the way and some issues, and getting acquired kind of papered over some of the issues that were going on, right? But, I think, am I betting that EA will do it? It's just been how many years now since Battlefield had a good game? Like Battlefield 5, was that 2017?
Yeah, it's a totally new team, and it's teams that aren't necessarily accustomed to first-person shooters, right? It's like a racing studio.
Yeah. But it's also
new management.
Who's the target demo for that game now? Because it's been so long since Battlefield had a successful title, most of the players have moved to something else, whether it's Call of Duty, other battle royale games, or Apex, whatever, right? They've moved on to something else theoretically. The audience, there's no captive audience that you can just massively bring back in necessarily. Like, I know that there's this like old military vet on TikTok, and he like snipes people from like 2 miles away in Battlefield 2042, and it's cool. But it's like, the audience size is not there relative to these other games, and especially the scale of investment needed to make that game that they want to make, right? So, I think this is honestly a make or break for the franchise as a whole. Like,
I would agree
if this game doesn't work, I think Battlefield is done as a franchise.
I think it's their best opportunity in a decade to launch an amazing Battlefield. But conversely, if it sucks, it's done.
Yeah, it's also timely in the sense that it's going to be a talk year for Call of Duty theoretically, right? Black Ops is strong, but I think historically Modern Warfare has been a stronger sub franchise. And, we don't know what the 2025 installment is of Call of Duty, if it's going to be one, or if they do another sequel, not a sequel, right? If it's another Black Ops, or if they go to some other subgenre for 2025. But if it's not Modern Warfare, like that, there is a window here where Call of Duty theoretically isn't at its historical strongest. Just another tidbit that plays in their favor. But, it's just been, we talk about execution issues with Ubisoft, but the studio in Sweden behind Battlefield, the original one, right?
DICE.
They haven't did it in a while now, and so DICE, and so it's it's hard to just kind of have a feel on it because it's been so long since it's worked.
Yeah, I don't remember if Soderlund left on a good note or in terms of the last title that he worked on. But since then, it's been pretty much downhill. He brought a lot of talent over to I forget his studio's name, but they were working Nexon now.
Unbarred, the one that went to Nexon, and then also a lot of them went to Massive at Ubisoft too.
Right. So yeah, it's a great opportunity, but it's like the folks that are doing this game now are doing it for the first time.
Yeah.
So smaller in 5 years, I guess. What was the second one?
So the other question is like, and I think we already answered it because I do buy into that notion, right? Like, do I think that Activision will create $10 billion of subscription revenues to Game Pass? And well, you have King, right? King is not going to be that.
Let's look at it this way. Will the monthly active users of Activision Blizzard be higher or lower in 5 years?
Well, that's a better question.
Because revenue is going to be harder to map than engagement.
It's a really interesting discussion because, for Battlefield, whatever, for EA in 2025, people are going to have this decision of, should I buy this game or should I just subscribe to Xbox? And it hasn't really happened before. I think as I'm thinking through this and as I was thinking through this for this episode, and I wrote that, my initial thought and the thought that I'm still carrying with me is that it'll be a smaller business in 5 years. And I think that's just kind of like mostly good for everybody else. But I don't see how a company, we keep going back and forth this public markets discussion with Activision specifically. And I do think that while it's hard to be a public company, I think it does instill the right qualities in gaming companies to produce the results investors want. Like that's consistent year-on-year growth, expanding margins, accountability, all these kind of things. And it's almost obvious that in a larger company where you become something like an operating entity, that some of those things slip because it's not quite as stressful. It's not quite as mandatory. It's not quite as detrimental if you miss something. And I just don't think we're going to see like an annual Activision Call of Duty cycle anymore. It doesn't make sense on.
Here's another question. If you had to bet on one of these to take market share from Call of Duty, are you betting on Battlefield or a shooter from China?
Oh, I am. I would take EA over China any day of the week.
Really?
I know Joe. I know Joe. And this is completely based upon just because you and I talk quite a bit, right? Whether it's through this or anywhere else. And I've been trying to give some Chinese games a chance that are targeted at the West. And I've been surprised at how rough they are when they launch. And I get this whole thing around being a beta or an alpha launch and stuff like that. But I'm tired of playing games that aren't finished. I think you lose a lot of your audience when you do that. And like, what do you expect me to spend on this game so you can finish it over the next 2 years while everyone else is producing like next generation games and hits? I just feel like there was a special time in that, and Fortnite started right in 2017. They're like, oh, this is early access, and it still is for whatever reason. But not everyone is Fortnite. Not everyone can build a shooter that's out there and it's super soft and has like 40% of the content it needs and has like bullet tracking issues and stability issues. Like, just get your shit straight. Like, they had two good opportunities that I've tried. Once Human and Arena. Both of them are very different games, but they should feel better on day one.
Yep. I'm there. I think if you ask me who could make a shooter better for the Asian market, because if you look at games that are made for the for the Asian markets, they're very different, right? And I think that's the challenge that the Chinese companies have coming into the West is, the player preferences are just so different, and the acceptance of what you're describing is very different too.
But if someone pulls like a Wukong on Call of Duty, that's a different story, right? If in China makes a game that comes out day one that just flabbergasts everybody, and those are different games, right? Wukong is a single player game. This is a complex cooperative / PvP shooter. I think there's an opportunity for anybody right now, but it just can't be soft and like early access and like, here, stick with us. We'll make this game good with you over the next year. Like, I have better things to do.
Right. Yeah. I mean, the way that I've been thinking about the acquisition was really from the perspective of basically Game Pass and mobile. And I think that the thing that I worry, I think about more is like, if Microsoft's strategy is more around Game Pass, what happens to Xbox? And then on the mobile side, I never quite got the motivation there unless Microsoft were to do their own app store, which I assume we may see at some point. But for me, that those would be the kind of things that would determine whether the acquisition was good or not. Basically, how Game Pass does. I'm still skeptical. We'll see, and then whether they're able to leverage anything on the mobile side.
I think it's a combination of their own app store, mobile Game Pass, and either a cheaper or freemium ad powered version of Game Pass, where you know you play a round of Warzone and then you have to, or before you go in to play a round of Warzone, you have to watch 2 minutes of ads, right? But then you can play, you don't have to pay. Whereas if you pay, then you don't have to watch the ads, right? Or cheaper price, like the streaming service is done. There's the cheaper tier, which has ads, and then the one that doesn't. Like, I think there's a lot of ways they can play with the pricing model, but I think ad-based revenue plays a role in expanding Game Pass beyond whatever 30, 40, whatever million subscribers it's at now.
Yeah, we often call Activision like an acquisition, but it's also a take private. So they made a long-term bet on Activision being worth more down the road, mixed in with some Microsoft assets. And, if they were to spin it out again over time, I think you mentioned this before, like a variety of things need to fall into place. And like one of those things is that like the value should be more than $70 billion. And it might take some time to grow into that valuation, especially if you're doing a pricing transition. And you could argue one that didn't really need to take place.
All right. Well, I mean, we're a little over an hour, and I think we've pretty much covered our 4 hot topics. Do you guys have any closing thoughts or anything else that you want to discuss before we jump off here?
I feel like we would get feedback for not discussing it if we didn't. So maybe I'll just give it 2 minutes and then we can end. Roblox, Hindenburg research. They're a known, short research. I hate the term like short seller because it's a stigma, but they do research on opportunities where they think that there is an actionable short opportunity because whatever, they're a fraud, they're overstating financials, they're overstating their opportunity, whatever the story is. In this case, they basically make 2 large accusations at Roblox. 1, the user numbers are overstated. 2, it's a network for pedophiles. The second, I don't think anyone can sit here and be an expert on because not in there every day seeing it. So don't really have a view there. And I think that was already reported in the news months ago. And, it's kind of just not been a non-event.
Not new.
The first comment on the users, I mean, look, in the filings, they say they can only track accounts, not people. So if people have more than one account, 80 million DAO is not 80 million individuals, right? And that's the same as every internet company in the world has that disclosure in their financials. So, it was a lot of stuff that on the face of it is like, oh, but then like, oh, we kind of knew that. And if you look at the stock reaction, kind of tells it all. It was not. When Hindenburg hits a company and they're right, the stock is down 10, 20, 30%, if not more. Stock didn't really budge on this. So, I think that says it all.
Yeah, I mean, the stock's been on an absolute tear. If you go back 5 months, their last bad quarter, it was down 30% in the morning, and then it's just been up and to the right since then, I think pretty much every day. So the company turned the corner on a lot of things that were knocks on them, right? The growth numbers inflected up. This was just unfortunate timing, but ultimately I think it was pretty much a non-event because, as I just said, it's like none of the stuff was new. And it's not, if you're looking at what a TMT analyst or a hedge fund analyst needs to understand for tech and internet specifically, all of those things are known issues with the space. The one thing that I would say is Roblox should be investing in the safety of kids on their platform. It's their lifeblood, and I think that they are. But that's going to be probably the lingering question for investors is like they've talked about being able to cut costs and that through AI and things like that. So they want to make sure that's buttoned up. It's just not you don't want to read about any of your investments having an ill effect on kids and things like that. But the user numbers for me are pretty much a much ado about nothing. It's not unique to them either.
All right.
Well, and I'm trying to remember, but did they, trying to check the file real quick, CFO is stepping down also,
Correct.
right?
Yeah.
Is that correct? Yeah. I mean, we said that when we talked about Roblox in depth, how, yeah, okay, I found it, right. So yeah, Guthrie stepping down. He was never a public company CFO before Roblox, if I remember correctly. And so it's, I'm curious to see who they bring in, because it could be an opportunity for them to really, get aggressive on the P&L. And we talked about the stock-based comp and all that. Like a new CFO could really, enact a lot of that change.
Totally. Well. Yep. I'm curious to find that out too. I heard it might be JK.
He's also getting $60K a month as his separation.
That's great. Let it drag on as long as possible. This could be a lot of research, folks.
All right. Well, there we have it. I think that is the end. So thanks, guys. Always great talking to you guys about this stuff. And for our audience, we will catch you next time. Bye, everybody.
See you.